Teck Resources reported a record copper price of $6.09 per pound in the second quarter, helping the company post profit before taxes of 1.5 billion Canadian dollars. Copper production rose 25% and costs fell 29%. Earnings before interest, taxes, depreciation and amortization more than doubled to 2.2 billion Canadian dollars. Chief Executive Jonathan Price said copper demand globally is rising due to data centers and electrification. All four of Teck's copper mines turned in higher production, led by Highland Valley Mine in British Columbia, with a 32% production increase. Teck Resources Limited delivered a strong second quarter, beating analyst expectations. The Vancouver-based miner reported 1.5 billion Canadian dollars in profit before taxes, with EBITDA more than doubling to 2.2 billion. Copper production rose 25% year-over-year, and copper prices hit a record $6.09 per pound, up 41%. All four of Teck's copper mines increased output, led by the Highland Valley Mine in British Columbia, where production grew 32%. Chief Executive Jonathan Price said operational momentum is increasing across the business. The company is also extending the life of its Highland Valley Mine by nearly 2 decades to 2046. The Calgary Herald reports that Vancouver-based Teck Resources Limited beat analysts' second quarter earnings expectations, with copper production rising 25% and copper costs declining 29%. Copper prices hit a record $6.09 per pound, up 41% year-over-year. The company's earnings before interest, taxes, depreciation and amortization more than doubled to 2.2 billion Canadian dollars. Chief Executive Jonathan Price said on a call with analysts that operational momentum continues to increase across the business. All four of Teck's copper mines turned in higher production, led by the Highland Valley Mine in British Columbia. Toronto Star reports that Teck Resources Limited posted a second quarter profit of 854 million Canadian dollars, or $1.74 per diluted share, up from a year ago. The Vancouver-based mining company said increased copper production and higher commodity prices drove the gain. Teck Resources Limited beat analysts' second quarter earnings expectations as its copper production rose 25% compared to the same period a year ago. Copper prices hit a record $6.09 per pound, up 41% year-over-year. The company reported $1.5 billion in profit before taxes, and earnings before interest, taxes, depreciation and amortization more than doubled to $2.2 billion. Chief Executive Jonathan Price said the company continues to increase momentum across the business. Teck is also moving ahead on a multi-billion-dollar project to extend the life of its Highland Valley Mine in British Columbia. The planned merger with Anglo-American Pelkey is on track to close between September and March 2027. Vancouver Sun reports that British Columbia Premier David Eby is threatening to restrict United States access to the province's critical minerals in response to newly announced U.S. tariffs. Eby said it is inexplicable for the U.S. to destabilize Canadian export industries while hoping to access Canada's mineral wealth. The Trump administration announced tariffs on Canadian goods starting August 19, including wooden furniture and tableware from BC. Analysts say the tariffs will hit Ontario, Quebec and BC hardest. Eby said there is not a chance in hell BC will put used alcohol back on the shelf. National Post reports that British Columbia Premier David Eby argued in favor of blocking the United States from accessing Canada's critical mineral supply in response to tariffs. Eby said at the First Minister's meeting in Charlottetown that it is inexplicable for the U.S. to destabilize Canadian export industries while trying to gain greater access to Canada's mineral wealth. He pointed to the U.S. Ambassador to Canada, Pete Hoekstra, meeting with mining executives while the White House continues trade pressure. Eby said, if the Prime Minister needs support with big sticks, he will be there. Canadian premiers are considering blocking exports of critical minerals like potash and oil in response to new United States tariffs. Ontario Premier Doug Ford suggested the measure, but Saskatchewan Premier Scott Moe quickly shut it down, as his province is the sole producer of potash. Heather Exner-Pirate of the Macdonald-Laurier Institute warned that cutting off minerals would be an act of war, given their importance in defense and high-tech. China currently dominates global critical mineral supplies. Prime Minister Mark Carney, attending the First Minister's meeting in Charlottetown, said he would do whatever it takes to defend the Canadian economy. British Columbia Premier David Eby says it is inexplicable for the United States to destabilize Canadian export industries like forestry, while seeking greater access to Canada's critical mineral wealth. He strongly suggested he is willing to leverage British Columbia's critical minerals as part of a national response to the newly announced 50% tariffs on Canadian goods, including wooden furniture and tableware from BC. Selon le Journal de Montréal faci a recrudescence de vils d'aluminum, de camions québécois de transporteurs et matériaux de grande valeur, une remorque chargée de lingots pied valeur jusqu'à $10,000 canadiens. Thus transporters renforcent leur sécurité et los routines pour éviter d'irréversibles. Sérieux ont demandé à anonymes pour crainte de représailles, des camions qui dorment, des leurs véhicules pourraient être en danger si un incendie s'affiche déclare.